What's going on, everyone? This is Keith L. Jones, aka the Coach, aka Did you hear about these new tax cuts? Well, today is simply a vlog on the 2018 filing season, which we're in technically 2019 right now. Today is January 16th, and I'm on Google, and I went to Smith and Howard Certified Public Accountant and Advisors. So, all you have to do, ladies and gentlemen, first and foremost, if you don't believe this information, or if you haven't heard of it, if you want to read up on it, Google the 2018 Tax Cuts and Job Act. All right, overview. So let's go over it. I'm going to highlight a couple changes that most people might not realize until it's too late. So, what's going on now? The major thing I see, one of the most important things I see is that the Tax Cuts Job Act changes were made for individual taxpayers. Some was good, some was bad. These changes will be in effect from 2018 to 2025. And here are some of the most notable changes, all right? There are new tax rates, brackets, and inflation adjustments. On the left-hand side over here, you see the 2017 tax rates. And from 2018 to 2028, you see the new tax rates. As you see, they were lower. So on that aspect, I guess it was a good thing. This part, not the whole thing, but this part of it, it actually lowered the threshold of how much you're going to be taxed on based on what income bracket you're in. What else changes? I'm gonna just talk about a couple of them. You do your research, all right? Personal exemptions and standard deductions. For 2017, taxpayers can claim a personal exemption of $4,050 each for themselves, their spouses, and any dependents. In addition, they can either itemize deductions or take a standard deduction based on their filings. 6,350 for singles, separately 9,350 for the households, and 12,700 for married couples filing jointly. In the new Tax Act and Job Act, it suspends personal exemptions, but roughly doubles the standard deduction amounts to $12,000 for singles and separate filers, 18,000 for head of households, and 24,000 for joint filers. This might be the year where you might want to go ahead and file jointly as a married couple. All right, the standard deduction amount will be adjusted by for rather inflation beginning 2019. So the standard deduction will be adjusted because of inflation starting this year, 2019. That's key. The family tax credits are essentially valuable because they reduce the tax bill dollar for dollar rather than just reducing the amount of income subject to tax like deductions do. Beginning 2000, the children credit it doubles to 2,000 per child under 17. The maximum amount refundable because taxpayer credits exceed his or her tax liability is limited to 1,400 per child. So let me see. Okay, yeah, so it doubled. Um, Also make child. All right. Above the line deductions. Above the line deductions um, are when you take your moving expenses and alimony payments. This says they are subtracted from your income to determine your adjusted gross income. Itemized deductions are these being all right. So it says the deduction for work-related moving expenses is suspended. You can't claim this anymore. Between 2018 and 2025, this was not suspended. It excluded rather military, um, the military and their families, based on military order. If he had to relocate, or you're stationed somewhere else, alimony payments are suspended after December 31st, 2018. Won't be deductible. It's right here, ladies and gentlemen. Look for yourself, okay? Research that. Itemized deductions. When you file your tax return, you can either claim standard deduction or you can itemize. All right, so if you claim standard deduction, your standard deduction will be $12,000. You don't have to itemize that, all right? There was some changes. The state and local tax deduction. It says the deduction for state and local taxes has been proposed for elimination under tax reform. It survived, but has been scaled back substantially. Um, Between 2018 and 2025, taxpayers can claim a deduction of no more of $10,000 for, yeah, $10,000. Mortgage interest deduction. It limits home equity interest deduction, medical expenses. For this, it says qualified medical expenses are deducted only to the extent they exceed the acceptable AGI threshold. The Tax Cut and Job Act's threshold from 10% to 7.5. So it goes down, ladies and gentlemen. Itemized deduction subject to the 2% floor. This deduction for expenses such as certain professional fees, investment expenses, and unreimbursable reimbursed rather employee business expenses is suspended for 2018 and 2025. If you're an employee and you work from home, this includes the home office deduction. So if you work for a said company and you're a virtual agent and work from home, you can no longer claim this deduction. Charitable contribution deduction, the limit on the deduction for cash donations to public charity is raised to 60% from 50. However, charitable deductions for payment made in exchange for college athletic event seating rights are eliminated. And what else? Elimination of the AGI based reduction for certain itemized deductions under if your AGI exceeded the acceptable threshold, certain deductions were reduced by 3% of the AGI amount over the threshold, not to exceed 80% of otherwise allowable deductions. For 2018 to 2025, this reduction is suspended. Wow. The AMT separate tax system that limits some reductions, disallow or this new law temporarily reduces the number of taxpayers who have to pay the 18 increase in That's good. Kitty tax. They got smart right here. One popular tax planning technique is to transfer investments or other income producing assets to family members in lower tax brackets to take advantage of the lower tax rate. The kitty tax makes this difficult to do. All right. Before, you would be able to take income shift certain things to individuals under 17, and the kitty tax basically generally applies to children at age 18 or younger, as well as a full-time student 19 to 23 when in college. The new act makes the kitty tax even harsher by taxing a child unearned income. Unearned income, according to the tax bracket used for trusts and estates, which are taxed at the highest marginal rate, 37% for 2018. Once 2018 taxable income reaches 12,500, in contrast, for a married couple filing jointly, the higher tax rate doesn't kick in until their 2018 taxable income tops 600,000. In other words, in many cases, children's unearned income will be taxed at higher rates than their parents' income. Other important changes, there have been some changes in the Roth conversions, the 529 saving plans, individual mandate, impact on your estate planning, businesses. It's changes, but it actually, the changes basically is in favor of individuals who have businesses and LLCs and corporations. The one thing that I did do was create a LLC, but let me go in here. Let me see real quick on W-2 wage limitations for pass-through entities. This is for C Corp. Bonus depreciation. It's a lot of changes, ladies and gentlemen. I would highly advise you, don't take my word, Google the Tax Cut Jobs Act of 2018. It actually was signed on December 22nd, 2017 by Donald Trump. It was his first bill signed into action. And during this current time, it's a lot of smoke and mirrors, ladies and gentlemen, that's going on. But we have to really see how this is affecting our family's bottom line, our business bottom line. And, if you're not paying attention and minding your business, you're losing out. Someone is minding your business for you. And all I'm doing right now is just bam. I'm just Googling and showing you where this information is. See right here, Tax Cut and Jobs Act of 2017. What are the new tax laws? Most people don't even know about this because you're going to just take this information, your tax information, and give it to someone to do your taxes. You need to know what's going on because you're not. I promise you. Hopefully you might, but most people is what you think you're going to get is what you're not going to get. If you understand what I'm saying. So definitely, just do your research. You see, it's over 498 million searches in the last, 68 seconds. Less than 68, 6/10 of a second rather. But again, do your research. That was the purpose of this vlog, just to pique your interest so you could do your own research. I'm doing this because I'm connected to a financial type company that's, enlightening my mindset and helping me evolve of how to play their game. So if you want to, just be involved, it's free to be in our Facebook group. But if you just want to, be around people that's learning how to play their game, more than welcome. Like, subscribe on this video, share if you find this valuable. And I appreciate it. My name is Keith L. Jones, aka the Coach, Mr. I'm minding my own business. I will see you on my next vlog.